First, welcome to the video on tax amendments, trading losses, and when to bring in a CPA. Next, we will set expectations. This session focuses on the risks of DIY amendments, the complexity of investment reporting, and how to protect your carry forwards. Finally, stay until the end for a quick quiz and key takeaways. First, we will review the urgent warning about amendments and missing income forms. Next, we will explore why investment complexity raises audit risk. Then, we will explain Section 1256 and the 60/40th split. After that, we will compare CPAs and retail preparers. Subsequently, we will cover common DIY pitfalls and a practical amendment checklist. Finally, we will summarize with an action plan and a brief quiz. First, this content is for education only and is not tax, legal, or financial advice. Next, tax outcomes vary based on your facts and jurisdiction, and laws change over time. Therefore, you should consult a licensed CPA or tax professional before taking action. Finally, use this video as a framework to ask better questions when you meet your advisor. First, you must understand that missing or incorrect income reporting is not optional to fix. Next, filing Form 1040X to correct omissions is necessary, even if the tax due does not change. Moreover, ignoring unreported income invites penalties and audit attention. Finally, we will move on to the complexity that arises from high-volume trading. First, amend as soon as you discover a missing 1099, because the IRS compares payer data with your return. Next, even if your bottom-line tax does not change, accuracy matters, because consistent mismatches can escalate into notices or audits. Moreover, filing a Form 1040X and maintaining documentation demonstrates good faith compliance. Finally, timeliness reduces interest and lowers the likelihood of compounding issues. Now we will examine why trading activity complicates everything. First, gather every information return, including all 1099 categories, and reconcile them with your brokerage statements. Next, obtain corrected statements and download transaction-level exports to support your reconciliation. Then, prepare Form 1040X with a concise explanation of changes and attach the affected schedules, such as Schedule D and Form 6781. Moreover, verify that capital loss carryovers and basis adjustments propagate correctly across years. Finally, file using the appropriate channel and keep a complete record to respond quickly to any IRS correspondence. Now let us turn to why investment complexity is uniquely risky. First, complex trading generates many information returns, often across several brokerages, which strains consumer software and manual workflows. Next, options and wash sale rules create basis adjustments that must be tracked across accounts and years. Moreover, futures and other Section 1256 contracts require Form 6781 and specialized 60/40th treatment. Errors here are common. Finally, even when you report overall losses, incorrect classifications can prompt notices and cause you to lose valuable tax benefits. Next, we will break down Section 1256. First, the diagram begins by determining whether an instrument is a Section 1256 contract. Next, if it is, gains and losses receive a blended tax character, 60% long-term and 40% short-term, regardless of actual holding period. Then, the amounts are aggregated on Form 6781 before flowing to Schedule D, where blended rates apply. Moreover, the diagram notes that carrybacks or carry-forwards may apply depending on the year and circumstances. Finally, if the instrument is not Section 1256, it follows standard capital gain rules. Now we will visualize the 60/40th split itself. First, this pie chart illustrates that 60% of net Section 1256 gains or losses are treated as long-term and 40% as short-term. Next, this blended character applies after aggregation on Form 6781. Finally, this structure can produce different outcomes than equity trading, with identical economic results. Next, we compare Section 1256 with standard equity reporting. First, this table contrasts Section 1256 futures with equities and options across character, forms, and common risks. Next, note that Section 1256 uses blended treatment and Form 6781, whereas equities depend on holding period and often require Form 8949 detail. Moreover, wash sale rules are generally not applicable to Section 1256, but frequently complicate equity and option reporting. Finally, Both domains can produce multiple 1099 forms and introduce reconciliation risk. Now let us compare who should prepare your return. First, a CPA specializing in investment taxation brings familiarity with Form 6781, Section 1256 rules, Form 8949, and multi-year carryover mechanics. Next, they can coordinate complex amendments with thorough documentation, reducing audit exposure and protecting carry-forwards. Moreover, their fee functions as insurance, which is valuable even in net loss years. Conversely, retail tax preparers are suitable for straightforward W-2 filings but often lack the depth for specialized trading schedules. Finally, choosing the right preparer aligns with the complexity of your situation. Next, we will cover DIY pitfalls. First, importing only a consolidated 1099 without preparing Form 6781 for futures can result in mischaracterized gains or losses. Next, treating Section 1256 results as ordinary income or loss instead of using the blended 60/40ths rules creates inaccuracies. Moreover, ignoring wash sale adjustments across multiple accounts leads to incorrect basis and carryover values. Then, inconsistent carryover figures across years raise red flags. Finally, filing late amendments without clear documentation reduces credibility. Now let us outline when you should absolutely hire a CPA. First, hire a CPA when you have numerous 1099s across multiple brokerages because reconciliation exceeds typical DIY capacity. Next, if you trade futures or complex options, proper handling of Form 6781 and other schedules is essential. Moreover, multi-year amendments and carryover corrections should be coordinated by a specialist to avoid compounding errors. Then, if you have received an IRS notice or face audit risk, professional representation is prudent. Finally, even in net loss years, a CPA protects and maximizes your carry-forwards. Now let us discuss how to work effectively with a CPA. First, create a year-by-year inventory of accounts and 1099 forms to provide a clear scope. Next, give the CPA full transaction exports and prior year returns to support reconciliation. Then, disclose any IRS notices and the filing dates of the original returns. Moreover, clarify which instruments you trade so the CPA can apply the correct rules, including Section 1256 where applicable. Afterward, agree on the order of amendments and target deadlines. Finally, request a documented carryover reconciliation and retain copies of all filings. Now let us reinforce learning with a quick quiz. First, here is the question. If you discover a missing 1099 that does not change your final tax due, what should you do? Next, the options are A. Ignore it because tax will not change. B. Wait until next year to include it. C. File Form 1040X to correct the return. Or D. Only update your personal records. B. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. First, the correct answer is to file Form 1040X to correct the return. Next, even if the tax due is unchanged, aligning your reported information with what the IRS receives reduces the risk of notices and penalties. Finally, let us proceed to a second quiz question on Section 1256. First, here is the question. How are net gains and losses from Section 1256 contracts typically characterized for tax purposes? Next, the options are A. 100% short-term, B. 100% long-term, C. 60% long-term and 40% short-term, or D. It depends only on the holding period. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. First, the correct answer is the blended 60% long-term and 40% short-term treatment. Next, this blended character applies after aggregation on Form 6781 and then flows to Schedule D. Finally, we will reinforce the main lessons with key points. First, this timeline shows the overall cadence of multi-year amendments from discovery to resolution. Next, the initial phase covers collecting all missing 1099s and statements. Then, in the first 2 months, you draft 1040X forms and reconcile carryovers carefully. Moreover, by month 3, filings are submitted and confirmations tracked. Finally, months 4 through 6 are reserved for responding to notices and completing documentation. Now we will summarize the key action items. First, amend promptly when you discover mistakes or missing information. Next, recognize that complex trading activities increase the likelihood of errors and audits. Moreover, Section 1256 uses 60/40ths treatment, reported on Form 6781. Then, for complex, multi-year, or futures-heavy returns, a CPA with investment expertise is essential. Finally, a CPA's fee functions as risk insurance, preserving carry-forwards and reducing exposure. First, this action plan provides a simple markdown checklist to move from discovery to resolution. Next, gather all documents and prior returns. Then, triage which years require amendments and prioritize those with notices or large discrepancies. Moreover, engage a CPA experienced with Section 1256 to review and produce a written carryover reconciliation. Finally, file, track, and maintain a response folder and calendar. Now we will conclude with a concise summary. First, we reviewed why accuracy matters and when to file Form 1040-X. Next, we covered the 60/40ths treatment for Section 1256 on Form 6781. Moreover, we emphasized hiring a CPA for complex trading situations. Finally, we explained that professional fees can protect compliance and carry forwards. Now let us close with a call to action. First, thank you for watching. Next, if this video helped you avoid risks or clarified complex rules, please like the video, share it with someone who trades actively, and subscribe for more content. Finally, post your toughest tax questions in the comments so we can address them in future episodes.